Hey guys, welcome to this video. Didn't do a stream today, but of course you can get my free training underneath. I'm going to run over the S&P mini futures market, why people think it's going down, how to manage it, what I'm looking at, and everything else. So you'll know if you follow me, I called it short around here. I'm one of those people who think the S&P will drip. Also, that's really where I'm looking at it. You can see off from the previous high, you've got sort of a flat overall long-term investor downtrend. Okay, so that comes off from this high here, and you peaked up slightly higher than where you are now. You peaked up about 4,800. You rebounded off 46.3, and within this downtrend now coming down, you're returning to these key MAs, things like your 20, 40, 100, and 200 moving average, but you're not quite there yet. So when I called this short myself, I'm just going to reset my chart. When I called this short myself, I did it slightly higher up from where we are now. I actually called various shorts as the price fell because we wanted to follow that trajectory to the downside. Okay, and we wanted to do that simply because we know that's how markets really move. So we're looking at these sort of pops so that you can reshort the market every single time as it starts to fall. And I think that's the trajectory you're really going to see over the longer term on this particular futures market. And people are mainly saying this will go down because they think, the end is nigh. They've seen various economic reports and you've seen all kinds of stuff in the media. Mainly, you don't need to worry too much about that. However, all I'm really concerned with is reshorting at the right time. Now, the right time for me is when you pull up and you've got a clear entry to take. So if you look previously at the levels we just spoke about in terms of where the market comes up and falls away, you'll notice again, you have to have that pop to the upside for you to continue trading it short. So I wouldn't really like to short it right now. It's too late. You've missed your opportunity more or less. But if you pop up here, it's a lot more attractive. And I would probably take that as a first short and then consider further entries slightly higher up in a risk-averse size. Okay, so one of them 45, followed by 45.50. Overall, I think your trajectory over time is going to follow something like this. Okay, under this low, up, okay, and then like this and down. I mean, people are saying they think it's going to go down simply because if you pull up something like a 12-month chart, the speed to which you've seen growth in the S&P 500 has been enormous. Okay, it's been really fast. If you look, it's only since 2019 that you've really shot up, and even before that, you've only got one red candle or two red candles between 2009. Okay, just going through the financial crisis all the way to now. It's basically a straight line up. So that's why people think it's going to crash significantly. I do think it's going to go lower. If you're going to buy it as a day trader or an intraday trader, you should probably be a little bit cautious with lower size. I think most certainly you'll get towards key support, which you can see here, and into between your 40, your 20 and your 40 MA, which are your nearest MAs, which have supplied, the stronger uptrend you've seen. But normally markets like this, they take a little while to come to fruition. You've had such a fast rise. And really, I think the reason why people see this market going down longer term is because even on the monthly, you can see that. Okay, you haven't really, well, let's go back to our 12 monthly. If you draw a fib, okay, the max retracement you've had is not even near 38.2% of this overall move. Okay, if you went even more than that and you went 2 yearly, 5 yearly, the situation would be even more compelling. But you've got this price rejection here as well. So there's tons of reasons why people are looking short on this market. But I would only re-enter short really if you get a pullback that's sufficient to do that. And that's, for me, coming in line with these key moving averages, keeping us in line with that natural market trajectory to follow the overall movement with underlying sentiment, which for many is turning to the negative side. You can see that in various new sentiment articles and things like that. So I hope that really helps. I'm short on S&P, SPX, and I'll continue to follow the move down. Thanks for watching. Hope that helped. My free training's underneath. I'll see you in the next one.